Welcome, everyone. Today, we are looking at Topic 3 in your SS2 accounting series, Depreciation of Assets. This is a very important topic. Depreciation is the reduction in the value of a non-current asset over time. It is caused by wear and tear, obsolescence, and age. This topic is a guaranteed essay question in your examinations. You must understand the causes of depreciation, the methods of calculating depreciation, and how to record it in the books. Pay close attention. Let us begin. First, let me explain what depreciation is. Depreciation is the systematic allocation of the cost of a non-current asset over its useful life. It is an expense. It is recorded in the profit and loss account. It reduces the net profit. Depreciation is also deducted from the asset in the balance sheet. This shows the net book value of the asset. Depreciation is not a cash expense. It does not involve the payment of cash. It is a non-cash expense. It is important for matching the cost of the asset with the revenue it generates. Understanding depreciation is essential for preparing accurate financial statements. This is a key concept. Now let me explain the causes of depreciation. Depreciation is caused by several factors. The first cause is wear and tear. This is the physical deterioration of the asset due to use. The second cause is obsolescence. This occurs when the asset becomes outdated. Newer and better assets become available. The third cause is age. Assets lose value over time. The fourth cause is depletion. This applies to natural resources. The value decreases as resources are extracted. The fifth cause is amortization. This applies to intangible assets. The value is written off over time. The sixth cause is deterioration. This occurs when assets are exposed to the elements. Understanding the causes of depreciation is essential for understanding why depreciation is calculated. This is frequently tested. Now, let me explain the factors affecting depreciation. Several factors affect the calculation of depreciation. The first factor is the cost of the asset. This is the amount paid to acquire the asset. It includes the purchase price and any other costs. The second factor is the useful life of the asset. This is the period over which the asset will be used. It is an estimate. The third factor is the residual value. This is the estimated value of the asset at the end of its useful life. It is also called the scrap value. The fourth factor is the method of depreciation. Different methods give different results. The fifth factor is the pattern of use. Some assets are used more heavily than others. Understanding these factors is essential for calculating depreciation accurately. This is frequently tested. Now let me explain the straight line method of depreciation. The straight line method is the simplest method. It is also called the fixed installment method. It charges the same amount of depreciation each year. The formula is depreciation equals cost minus residual value divided by useful life. The annual depreciation is calculated by subtracting the residual value from the cost and dividing by the useful life. For example, if an asset costs $100,000, has a residual value of $10,000, and a useful life of 5 years, the annual depreciation is $100,000 minus $10,000 divided by 5 equals $18,000. The straight line method is easy to understand and apply. It is the most common method. Understanding the straight line method is essential for calculating depreciation. This is frequently tested. Now let me explain the reducing balance method of depreciation. The reducing balance method is also called the diminishing balance method. It charges a higher amount of depreciation in the early years. The amount decreases over time. The formula is depreciation equals net book value multiplied by the depreciation rate. The depreciation rate is a percentage. The net book value is the cost minus accumulated depreciation. For example, if an asset costs $100,000 and has a depreciation rate of 20%, the depreciation for the first year is $100,000 multiplied by 20% equals $20,000. The net book value becomes $80,000. The depreciation for the second year is 80,000. Multiplied by 20% equals 16,000. The reducing balance method is used for assets that lose value quickly. Understanding the reducing balance method is essential for calculating depreciation. This is frequently tested. Now, let me explain the difference between the straight line method and the reducing balance method. The straight line method charges the same amount each year. The reducing balance method charges a higher amount in the early years. The straight line method is simple and easy to understand. The reducing balance method is more complex. The straight line method is suitable for assets with a steady pattern of use. The reducing balance method is suitable for assets that lose value quickly. The straight line method gives a constant charge to the profit and loss account. The reducing balance method gives a decreasing charge to the profit and loss account. The straight line method is more common. The reducing balance method is used for assets like vehicles and machinery. Understanding the difference is essential for selecting the appropriate method. This is frequently tested. Now, let me explain the sum of the year's digits method of depreciation. The sum of the year's digits method is an accelerated depreciation method. It charges a higher amount of depreciation in the early years. The formula is depreciation equals cost minus residual value multiplied by remaining useful life divided by sum of the year's digits. The sum of the year's digits is calculated by adding the digits of the useful life. For example, if the useful life is 5 years, the sum of the year's digits is 5 plus 4 plus 3 plus 2 plus 1 equals 15. The depreciation for the first year is cost minus residual value multiplied by 5 divided by 15. The depreciation for the second year is cost minus residual value multiplied by 4 divided by 15. This method is less common than the straight line and reducing balance methods. Understanding the sum of the year's digits method is essential for advanced accounting. This is a key concept. Now, let me explain the units of production method of depreciation. The units of production method charges depreciation based on the actual usage of the asset. It is also called the output method. The formula is depreciation equals cost minus residual value divided by total estimated output multiplied by actual output. The depreciation is calculated for each period based on the actual production. For example, if an asset costs 100,000, has a residual value of 10,000, and a total estimated output of 100,000 units, the depreciation per unit is 100,000 minus 10,000 divided by 100,000 equals 0.9. If the actual output is 10,000 units, the depreciation is 10,000 multiplied by 0.9 equals 9,000. This method is suitable for assets where usage varies. Understanding the units of production method is essential for advanced accounting. This is a key concept. Now let me explain how to record depreciation in the books. Depreciation is recorded through a journal entry. The entry is debit depreciation expense and credit accumulated depreciation. The depreciation expense is recorded in the profit and loss account. The accumulated depreciation is recorded in the balance sheet. Accumulated depreciation is a contra asset account. It is deducted from the cost of the asset. The net book value is the cost minus accumulated depreciation. The journal entry is made at the end of each accounting period. The amount is calculated using the chosen method. Understanding how to record depreciation is essential for preparing financial statements. This is frequently tested. Now, let me explain the importance of depreciation. Depreciation is important for several reasons. First, it matches expenses with revenue. It ensures that the cost of the asset is matched with the revenue it generates. Second, it provides a realistic value. It shows the asset at its net book value. Third, it helps in tax planning. Depreciation is a tax-deductible expense. Fourth, it helps in replacement planning. It provides funds for replacing assets. Fifth, it helps in decision-making. It provides information about asset usage. Sixth, it ensures compliance. It is required by accounting standards. Understanding the importance of depreciation is essential for understanding why it is calculated. This is frequently tested. Now, let me explain the limitations of depreciation. Depreciation also has some limitations. The first limitation is subjectivity. It requires estimates of useful life and residual value. These estimates may be inaccurate. The second limitation is complexity. The methods can be complex to calculate. The third limitation is cost. It costs money to calculate and record depreciation. The fourth limitation is time. It takes time to calculate depreciation. The fifth limitation is not a cash expense. It does not involve cash. This can be misleading. Understanding the limitations of depreciation is essential for a balanced view. This is a key concept. Now, let me give you sample exam questions to prepare you for your test. What is depreciation? Depreciation is the systematic allocation of the cost of a non-current asset over its useful life. State the causes of depreciation: wear and tear, obsolescence, age, depletion, amortization, and deterioration. State the factors affecting depreciation: cost, useful life, residual value, method of depreciation, and pattern of use. What is the straight line method? The straight line method charges the same amount of depreciation each year. State the formula for the straight line method: cost minus residual value divided by useful life. What is the reducing balance method? The reducing balance method charges a higher amount of depreciation in the early years. State the formula for the reducing balance method: net book value multiplied by the depreciation rate. Explain the difference between the straight line method and the reducing balance method. The straight line method charges the same amount each year. The reducing balance method charges a higher amount in the early years. How is depreciation recorded? Debit depreciation expense and credit accumulated depreciation. State the importance of depreciation. It matches expenses with revenue, provides a realistic value, helps in tax planning, helps in replacement planning, helps in decision-making, and ensures compliance. Let me summarize everything we have covered today. Depreciation is the systematic allocation of the cost of a non-current asset over its useful life. The causes of depreciation include wear and tear, obsolescence, age, depletion, amortization, and deterioration. The factors affecting depreciation include cost, useful life, residual value, method of depreciation, and pattern of use. The main methods of depreciation are the straight line method and the reducing balance method. The straight line method charges the same amount each year. The reducing balance method charges a higher amount in the early years. Depreciation is recorded by debiting depreciation expense and crediting accumulated depreciation. Depreciation is important for matching expenses with revenue and providing a realistic value. Understanding depreciation of assets is essential for accounting. This is Topic 3 in your SS2 accounting series. Study it well. It is a guaranteed essay question in your examinations. Well done.